Welcome back, everybody, to another market day. Today is 8/18/2020. I am your designated Inquirer. My name is Axel. And welcome back. Hope you guys had a good Monday. It's Monday, so you can only hope for the best. Today it was kind of interesting. We did significantly break to new all-time highs on the NASDAQ. It was a significant move. It was on increasing volume, but not dramatically increased volume. Okay. Significant is a relative term. In terms of being able to pop up above like a previous known value, etc., and how it went to close, which was strong into the close, there's a fair amount of statistical relevance that there could be continuation to the upside tomorrow. Whether or not it stays above the close of today, tomorrow, well, we'll have to see. But as of right now, statistically speaking, we've got a good shot at going higher. Now we move closer to what was the past couple days. Between yesterday's close, we basically gapped up because generally the time, sorry about that, let me go ahead and get a little bigger representation here of what's going on. Okay, so over here along the bottom right here, you can see where the beginning and the end of the day was. Okay, and then from the end of the day to the next start of this morning, you can see where that happened. Okay, the time in between is what's called intraday trading. All right, generally it's like half hour after close, and then starting from like 2 or 3 in the morning, somewhere around there. Basically, from when you've got Asia trading and or very early morning, where basically commodities and stuff like that will start to trade. Anyway, a lot of stuff can happen between here and there. During this time, what can happen is what's generally called a gap up or a gap down. You generally only see that when you take a look at your daily candles. So even though from here it closed down, it opened a little bit higher, so it kind of gapped up a little bit. This isn't as prevalent as when there's a major incident in a major indice is very difficult to do, but it can happen more so in a stock. For example, here there's a lot of gap ups and gap downs. It's a very sporadic time. It can go from closing here to opening down here. It's a very dramatic gap, right? A lot of times what will happen subsequently after is that you will have a gap closing, meaning that there is an event where traders basically try and close the gap between this close and this open, which kind of happened. They kind of filled it, but this is a more representative fill-in of the gaps that were made during these 3 days. But it's no guarantee that it's gonna stay less chaotic or not, but the point is that it can happen, right? So moving back to what we were experiencing with the NASDAQ, if we go back to that, what we've got here is from the open to our current close, we have here to there. From there to there, we have basically a gap up. All right, so what happened there? From these two levels, from here to the open, we shot up initially to try and test to the upside, which we didn't get over previous high levels, but what we did do is drop down and we closed the gap. Okay, so basically to the levels of the previous close. From then on, the market went on a tear throughout the day, pretty consistently moving upward with hardly any slowdown to the upside. Now, something that can happen during the stock market is that you can have a couple things happen. One, you can have what's called a relative weakness and a relative strength in comparison to the rest of the market. So if this shows you more or less a relative just the market in and of itself, or a sector, in this case the tech sector, this right here is Apple, right? So during this time, which is more or less this last bit here, you've got basically movements up and down, and generally an associated stock with the market can be they can track together. And how we can see that better is if we kind of overlay what they were looking like one on top of each other. So if we do that, we'll go to this portion right here, and then what we'll do is we'll go ahead and overlay, compare with okay. Now what we see here, all right, what we see here is basically that at the beginning, it basically kind of mirrored what was going on in the NASDAQ, right? Pretty consistent mirroring. Yeah, pretty consistent mirroring all the way through, right? Up until you get to like around here. Here, there was a move upward, same as was shared with the NASDAQ, but from here on out, even though this was moving straight up, basically, this was moving downward. And from here, even though there was a small move down, this was more sharp. This was a more pronounced and sharper move to the downside. A very much new movement to the upside, but only a minor movement to the upside. Further movement to the downside, further movement to the downside. Then it started to kind of track the same way, and instead of going up, it kind of stayed muted, and or it dropped just a little bit lower, right? So when you have a stock and an index, its relative index, in this case with Apple and the NASDAQ, which basically are kind of tied together to a certain extent, when they're tied together and they start to diverge one from another, that'll show you basically whether one stock is relatively strong and or relatively weak to its competition and or its sector, or what the industry would call its peers. In this case, near the end of the day, Apple was showing relative weakness. Now, how that'll translate into tomorrow is kind of hard to say, but generally it would mean that investors are more or less more ready to sell the stock than to buy it, and maybe even move into a relative peer in the same sector. For example, if we take a look at Facebook kind of had a different story up until basically the close, where it did not go up either, but it more or less kind of shared the sort of movements that were seen by the NASDAQ. Well, it did dip here from here on out, and if anything here, it had almost a relative strength, because while it was slowing down here, it just kept going. It just kept going, and it didn't stop until about this point right here, where it kind of did share some of the movement, but it did not decline to where it basically started, which this kind of did, right? So here you can see that it declined to about this point here, but relative to here, the Nasdaq kind of stayed stronger. So even Facebook has a little bit, a very small amount of relative weakness compared to the Nasdaq, even though its run up was very strong. But yeah, so that happens to be how you can sometimes tell relative strength and or weakness of an index and a underlying stock. Now, today, let's see, I think it was HD, which is Home Depot, right. All right, in this case, cannot be compared to the Nasdaq because it is not in the same sector. What's kind of interesting here is that Home Depot reported really well and yet fell on the day because the relative and subsequent other reportings of its peers like Kohl's did not talk too well about the future of the economy. And one can argue, as what was being spoken about by one of the economic advisors that is talking to Biden and Kamala Harris, what she was saying, which I found it very interesting, is that there have basically been two recoveries. One that has been affecting high income people and people who have more or less kind of just been employed. But to what level, right? Because if they've been paid well, their relative success during this time has been subsequently higher and have been able to invest in their homes, have been able to invest in making their own home office, have been able to make these changes that have been kind of reflected in companies like Logitech, right? LOGI. Where if we take a look at the basically half a year since March, we've basically seen just a run up. This is basically everybody that's been able to and had the wherewithal to actually make those changes. That they could buy a webcam, they could buy a new keyboard, they could buy a new mouse, they could buy a joystick if they wanted to, screens, other paraphernalia in terms of like office stuff, because they do sell a lot of things. A headset, like I have a headset, but I got this one a lot cheaper than what normally people would get them for, because I know how to shop for stuff at a discount. In any case, yeah, so there's a lot of stuff that happens. Well, in this case, this movement here has more or less been reflected by and of people that have had the money to make the investment into a home office, right? Whether that was an onset caused by stimulus in terms of the $1,200 check and or the extra $600 a month, to what extent happened, we know it happened, but I feel like the larger question is whether or not it's sustainable, because you don't need to make 10 offices in your home office, you generally just need to make one. And while some students may need like a laptop, a computer, etc., a desktop, like something for themselves to study from home, this is not going to be a repeat thing that happens every quarter and or every semester, every year even, because one computer that we take a fair amount of time in building can last almost 5, and depending on if you make minor adjustments along the way, almost every 5 to 10 years, depending how you do it, how you go about making your computer upgradable, what components you use, etc., and all that stuff, but that's for another day. So companies like Logi, companies like NVIDIA have basically had the same chart from from March, and to a certain extent have dwarfed basically anything that they've seen subsequently from their previous history, right? This is an insane move. Whether or not this is sustainable, I don't think it's sustainable. The only thing that would keep Nvidia sustainable is more of a recent advent than not. Apart from people just upgrading their home offices and stuff, the advent of the Bitcoin, I think, could probably be a closer let's take a look here, explanation as to why this happened. And maybe not. And maybe not. But the trough, well, at least from here, when Bitcoin does drop below a certain amount, it doesn't become as viable to mine. And so when it starts dropping below that point, it starts to affect the price point of Nvidia. Here there was starting to be an increase. We're above a certain point, also above a certain price, like for example 8,000 or 7,000, then it starts to become more profitable to start mining. In which case, an elevated price point, like above the 6,000 or so, has kept more or less demand for graphics cards up. Apart from people just going through a normal upgrade cycle. But you know, that's neither here nor there. We're still talking about, thank you, Nvidia is a portion of the Nasdaq, and so that kind of also contributes to why the Nasdaq has done so well compared to almost every other index. Yeah, I think that's just about everything. Tomorrow Nvidia reports, so we'll see if tech can more or less continue its rise, and whether Nvidia in and of themselves see any of this storm clouds in the horizon, of whether or not they believe that this growth is sustainable into the third and fourth quarter, and if they're attributing a lot of this growth to increasing Bitcoin prices. And yeah, so we'll see how the rest of the market reacts to it, because if they see storm clouds in the future in terms of the general economy but see a bright future for themselves, is that them reporting? I don't think they report today. Sometimes there's a freak purchase. Yeah, anyway. There could be news. Alright. Give me a second, guys. I'm gonna go ahead and move this one off screen real quick. Okay, let's take a look here. Let's see what happened. So Facebook is getting hit. I'm not sure why that would cause an increase in the Nasdaq. Privacy law, we're seeing an impact on the business from CCPA today. Facebook CFO has admitted we don't know what the impact will be. While navigating the mammoth advertiser boycott and potential federal antitrust charges, Facebook Inc.'s chief financial officer may be most concerned about California's strict new privacy law. The California Consumer Protection Act, or CCPA, is considered the nation's first true data privacy law and among the strongest aimed at the digital economy. Consumer advocates say that it could usher in more state laws that hold the likes of Facebook, Alphabet, or rather Google, more accountable for how they monetize the data of billions of people worldwide. So it had already become law on January 1st and began being enforced by California's Attorney General Javier Becerra July 1st, after a 6-month grace period. When asked about it in the near end of the company earnings conference call last month, CFO David Wenner launched into a long discourse about its impact on advertising, the lifeblood of Facebook. You know, in the near term, that's really around implementing CCPA, and in the long term, it's more potential for further similar regulation across the globe. We're seeing an impact to the business from CCPA today. We don't know how the impact will be, how things will play out. I still don't see why it would be a positive jump. All of a sudden, a positive jump in the Nasdaq. That seems very strange. Okay. All right. Yeah. So that was a very strange movement. It should have precipitated a drop, which it kind of did. But for some reason, there was a large buy that triggered through the system and caused a large spike. Sometimes you gotta dig through the news to see what it could have been, but in this case it could have been an algorithmic computer probably just picking out certain words from the article and executing a trade based off of that. But it seems kind of anomalous, and if anything it should be affecting Facebook and companies that depend off of marketing, like Google, to a certain extent, possibly Apple, because it's going to affect how many companies can make, the amount of money that companies can make off of apps and stuff that basically run off of the data of its users, stuff like that. So yeah, that's the news today. I hope you guys enjoyed today's market day, and I'll see you guys again tomorrow. Until then, you guys take care, stay safe, stay healthy, and yeah, see ya. Bye.